I am telling you about what is deposit insurance. The deposit insurance is the government guarantee that an account holder money at an insured bank is safe up to certain amount. Currently, $250,000 per account. Deposit insurance is provided by the Federal Deposit Insurance Corporation (FDIC), a government agency that collects the fee insurance premium from banks. The FDIC is overseen by a five-member board, the three nominated by the President and confirmed by the Senate, plus the Comptroller and of the Currency and the Director of the Consumer Financial Protection Bureau. Deposit insurance, created during the Great Depression in 1933, has sharply reduced the frequency of the bank runs that once were common in US, as former Federal Reserve Chair Ben Bernanke explained in his 2022 Nobel Prize speech. About 40% of all US banks disappeared between 1929 and 1933. They failed, closed, or were absorbed by other banks. That happened because there were massive and runs where people lost the confidence in the bank and pulled out their money. The ones that were closed could not make the loans, obviously, and one that survived became extremely cautious, being very reluctant to make loans. Shortly after became the president, he called a bank holiday and all the banks had to shut down, and promised the American public that they would not open up until the government had inspected them and was confident that they were in viable condition. And then the Congress passed deposit insurance so that the small deposits would be guaranteed, and that even if their bank failed, the government would pay them off, and that led instantly to a stabilization of banking system. And that, of course, as the banking system became workable, that let go and helped lead to recovery. How much of an individual bank account is recovered by insurance? By law, up to $250,000 is insured for each deposit account in each bank. And Congress raised the limit from the $1 lakh to $250,000 temporarily in the 2008 and made the increase permanent in 2010. For most Americans, deposit the insurance is more than enough to insure all the money in their checking and saving account. However, business and the other large organization may hold over 250,000 at a given time. As of the end of the 2022, about 43% of the all banks deposit were uninsured, according to the FDIC. What is the FDIC funded? The FDIC received no appropriation from the Congress, although it is backed by the full faith and credit of the US government. Instead, the agency is funded by the insurance premium paid by the banks and from the interest earned on the FDIC Deposit Insurance Fund, which is invested in the US government obligations. The bank premium depend on the size of the bank and the bank regulator assessment of the riskness of the bank. And the Deposit Insurance Fund had $128.2 billion, or about 1.27 of all insured deposits. And the FDIC is gradually increasing the premium to bring the ratio up to the statutory minimum of the 1.35% by September 30, 2028. Its target is to get the fund up to 2% of the insured deposit over the long run to reach a level sufficient to withstand a future crisis. Thank you so much guys for watching the video.